Oracles, so much exciting stuff going on today. We've got the semi-truck release date officially announced by Elon. We're going to do a little follow-up recap from the interview I did with Alexandra last night about the credit rating upgrade. And then we got some news that could potentially affect Twitter and Elon and not having to buy it and perhaps buying it for less. So we're going to get into all of that shortly. This has been an amazing day. I'm like a little kid right now, so excited because I was able to have Alexandra on last night. So Alexandra, I just wanted to thank you again so much for being able to jump on the channel. You gave us such great information about everything, so thank you so much for that. And thank you everyone who was able to join us last night as well. Tonight I will be having Vinny on the channel. We're going to be rehashing all of this as well, discussing all of that. And then tomorrow I will be on my Tesla weekend at 11 a.m. Eastern time with James Stevenson as well, if you guys want to join us over there. All right, so to jump right into it, we've got the Tesla Semi. Elon had tweeted last night that the Semi will begin production on December 1st of this year, with deliveries going to Pepsi. So deliveries, I would imagine, are going to come right after it. We don't have any information or details on what the speed of production is going to be, what the ramp is going to be. Some people in the past have said, 100,000 per year. I don't know honestly what it is. I think that's going to be a very high number. But the biggest question right now is, are they using 2170 batteries or 4680 batteries? I have not seen that answer yet from Elon. A lot of people had asked the question, no answers yet, so I do not know what is going to go into them. I know initially they were thinking about the 4680s. Don't know, because if they are putting 4680s in these, that means that the ramp for the 4680s is now back to the pace that they were looking at previously. So still a lot of unanswered questions. Maybe we'll get some of these at the earnings call. And now with this information, that may be one of the questions that retail investors are going to ask when it comes to the earnings call. And so those of you who were able to join us last night for the live stream, you got all of these answers, but I wanted to rehash it for many of you who are not able to jump on, and I'll give you the quick rundown of all the different things that Alexandra and I were able to discuss, and a bunch of the answers that she was able to provide us with for why things like, why didn't the stock run yesterday? We were all anticipating the credit rating upgrade was going to be a great catalyst for the stock, and the stock really didn't move. Went up a few dollars and then ended up coming right back down, and we didn't finish green on the day at all. So the reason being is because this is more of a long drawn out growth that's going to happen with the company. So the biggest impact is going to be the lowering of the beta. So for you guys who are not aware, the beta is the volatility of the stock. We've talked about it in the past where, the beta for Tesla has been around a 2. So when you talk about a beta, that is, if you have a beta of 2, when the indices move, so the S&P moves 1%, Tesla will move 2% in both directions. So the volatility of the stock is another reason why a lot of investors do not get into it, because it's so volatile. So now that they are investment grade rating, they are going to have that beta come down. The beta is going to come down because a lot more institutions are going to be buying it. Institutions are buy and hold long-term companies. So they're going to be buying massive amounts of stock, and they're going to be holding this for a long term. So a lot less of that day trading going on, because institutions are not day traders. So that beta will come down, that will bring the volatility down. And this is going to happen over the next 3, 6, 12 months. And so that's why it's going to be a longer drawn out growth for the stock. And also looking at the fact that we've been talking about how volumes are lower. I was wondering, why are volumes so much lower than they were before the split? And so she had answered, because a lot of these companies and institutions have been buying bonds up. When you have a bond opportunity to buy, you're going to be buying up those bonds. So you take your money out of the equities that you have and you put it into bonds. This is exactly why we have seen all of the volume so low. And when you have lower volume, usually you see a lot more volatility, like we have been seeing. So now that they have been investment grade, this will build up over the next year. And as we have talked about before, in a rising interest rate environment, high growth stocks are not as appealing, which is why we see this PE compression going on. So despite Tesla being as strong as it is still considered a high growth stock. So there's a lot less institutional ownership going into those. So as the economy starts to turn around and the Fed decides to make that U-turn with interest rates, that is when all of these institutions over the next year are going to be buying it. So there's a giant bullseye on Tesla right now for a lot of institutions to want to buy in. and that U-turn from the Fed signal is going to be that time where the stock is really going to take off. This is why we have discussed in the past that when we do make this U-turn, Tesla is going to be one of the strongest, if not the strongest company coming out of this. And one of the numbers we were discussing was the institutional holdings for when it comes to Tesla. The last numbers and data that we have are from last June, and that was around 44%. But if we're taking a look at the volumes that we have going on, and volume is down about 25%, we may see institutional holding down about the same. So we may have institutional holdings around that 30% mark versus 44%. And so that's going to be significant. So if we're around that lower mark and a lot more institutions start putting in, there's a lot of strong big money that is not in the stock yet. So to me, this is another key reason why these are amazing buying opportunities, because we have very suppressed prices with no big money really in the stock at all. Think about Apple, Microsoft. They're up around the upper 80s when it comes to institutional ownership. There's a lot of room for institutions to come in and purchase Tesla. And now we have just gone from junk rating up to investment grade, and there's still some grades above us that we can go to. So the question is, as we go up to those next grades, is it going to make a difference? And it will, but not as significant as this initial jump is right here. Another question is now that we have split ratings, because S&P has given them that BBB rating, but Moody's is still considered a junk rating, is that going to matter? Alexandra said no, because Moody's is usually going to follow suit. And one of Moody's issues was the fact that, Tesla didn't have a stronger product lineup and financials, a bunch of other hootenanny. But, now that we have the semi-announcement coming out and S&P has done this, it is no doubt that Moody's is going to be doing this within the next 4 months. So she feels that by the end of January, after Q4 earnings at the latest, Moody's will be giving the upgrade as well. And Alexandra, being as awesome as she is, she's going to reach out to Moody's and suggest that they do the upgrade on my birthday of November 8th. So thank you, Alexandra, for that. And lastly, we did discuss the buybacks as well. And she was saying, there's 2 different ways to do the buyback. They could just use some of the cash that they have and do a buyback. And the price right now at $240 does seem like a very good price to buy back the stock at. So they could potentially do this, or they would do a bond issuance and then buy back that exact amount of stock as well. Doing that, this is what Apple has been doing since 2013. It's kind of a way to skirt the system, because you're basically paying these credit rating agencies their fees to give you better credit ratings. It's a silly game to play, but unfortunately it's a game that is out there, so we're not sure which way Tesla is going to go with it, but it does make sense for Tesla to do this. The other thing we had discussed is, looking at Q4 deliveries that are coming up. We've got a lot of discussions of, Q4 deliveries potentially hitting that 495,000 mark, but because of the EV tax credits and all the other stuff going on over in China with more delayed demand, it's not a demand issue, it's more of a delayed demand, because people are anticipating prices possibly coming down or EV tax credits coming out. So if people are pushing off demand, that may go into Q1, and if Tesla is anticipating this going on, we may see a lackluster Q4 just because of these reasons. Again, it's nothing bad about the company, it's just, because of different government regulations pushing demand off, it may show a weaker than expected Q4 earnings and Q4 deliveries, but we'll see a massively strong Q1 of 2023. If Tesla is anticipating this, they might hold off on buybacks until the end of Q4, knowing that this could potentially happen and see the stock price come down. Again, not spreading fun. This is just something that she and I were discussing last night as a potential, but as far as I am concerned, thinking about that there's, low institutional holdings in the company, if we are going to be getting lower than expected numbers and maybe a stock price pullback just because of a delay of deliveries versus anything actually fundamentally wrong with the company, that to me just means load the boat even more. Amazing, amazing buying opportunities if that does end up happening, because then think about it, if you ended up buying at a time like that, Tesla will also be buying at the time like that if they choose to do the buyback at that time, and this is their game plan. So then Tesla would buy back in, and you have bought stock at the same price that Tesla would be buying stock at. Boom. I mean, that would, to me, would be the absolute best buying opportunity if that does end up playing out. I do want a stock to go to the moon. I still think it's going to go to the moon. If I told you that you could put $1 worth of pennies into a jar and all you had to do was wait a year and that dollar would become $2, but over the course of that year, that dollar might become 50 cents first, but at that 50-cent mark, you could put another dollar in and that other dollar might turn into 75 cents before it becomes $4. Would you do it? I mean, that to me makes the most sense. And that's exactly the situation that's playing out in the near term, potentially. And again, I'm not saying this is going to happen, but if this is how this is going to play out, and we do end up seeing that dollar become 50 cents, knowing that it's going to become $2 in the future, wouldn't you put more money in? That's how I'm doing it. Not financial advice, but that is how I am viewing it. And that's why for me, despite the fact that we want the stock to go to the moon, if we pull back sooner, I am okay with that because I know in the long term that dollar is going to become $2, $5, $10 down the road. But because I don't know how this is actually going to play out, I still stick with my strategy. I still dollar cost average every single day, $25, and that may end up going up very soon, just trying to balance out with the cash. But the way I have been playing it all year long, which is I dollar cost average every day and I save up to 10% cash. And then once I hit that 10% cash, I start adding a little bit heavier into it. And then I will take a look at that lump sum that I have and see when I see that next big buying opportunity on a dip, and I will dump half of that into the stock. So timing wise, if this plays out this way, that would be ideal for my situation. But because I don't know what's going to happen, I still put that money in every single day because who knows, maybe where we're at right now is the bottom and we're going to bounce up from here. So again, not financial advice, but that's how I'm playing it in anticipation. I prepare for the worst and hope for the best. And so far this year, that has done me very well. All right, and now the last thing about Twitter deal going on and something that could end up boosting the stock price as well. Thank you, Esoteric, for pointing this out. I haven't been following Meet Kevin for a while now. So many other things going on, so many awesome other people to follow. So he had pointed out that Meet Kevin had done a video of discussing this whole court deal that's going on. And just yesterday, the judge had pushed off the court date to October 28th. It was October 17th. It's now pushed off. The significance behind this is the financial backers signed an agreement back on April 20th for a 6-month agreement to be able to back this deal for that $12.5 billion. That agreement expires on October 20th. So after October 20th, the financial backers and the banks can back out of this deal. If they back out of this deal, the contingency that Elon had in this entire deal was if he does not have the financial backing, he can pay that $1 billion to break up. He can pay that $1 billion breakup fee. So, knowing that this is going on, knowing that it got extended, knowing that based upon what the Wall Street Journal had told us, and that Elon had been trying to work out a discounted deal with Twitter just recently as low as 30% off, and Twitter had said no and they couldn't come to an agreement, this now getting pushed off past that October 20th date means that Elon is in a situation where he can either pay that $1 billion breakup fee if these banks decide to back out of the deal and let that expire, or he will pay a 30% discount to buy Twitter as well. So Twitter now is kind of going to be in a pickle where they're going to have to make a decision of, do we sell Twitter to Elon at a 30% discount, or do we accept that $1 billion breakup fee and we keep the platform as it is? That's how I'm viewing it. Obviously, this can go to that point. The banks can just say, you know what, we are going to hold steady and we are not going to back out of this. We go to the court date, Elon buys it for $54.20 per share. That can definitely play out as well. But knowing that we've hit this point, and as Meet Kevin had mentioned, the banks with this debt, that would be holding massive debt going into rougher economic times ahead, potentially. So they probably don't want to hold this. So getting past that expiration date and just letting it expire, they can be like, all right, we're good. No problems at all. No harm, no foul. We are out of this. It is expired. We can walk away. And of course, they can hash out some sort of other deal. Maybe it's not 30%. Maybe it's 25%, 20%, whatever it is. Seems like Elon now is in the driver's seat when it comes to negotiations. A lot of things we're going to be finding out, and this is coming out right after Q3 earnings. So the next couple of weeks are going to be extremely exciting going on, lots of stuff to talk about. So we will track this, and you guys can let me know in the comments below what you think is going to play out with the Twitter deal, how you guys think this credit rating is going to affect Tesla stock over the next year, and how you think the stock movement is going to be when it comes to the Q4 deliveries based upon the numbers that we have been discussing, potential delayed deliveries that are going on, and buybacks. Just so much to talk about. You guys can share all of your comments below on all of this because Just so much exciting stuff going on, and the potential future implications of all of this, to me, totally outweigh any of the stock price movements at the moment. Again, we were talking about how low volume usually means more volatile stock movements. That's just where we're at right now. So again, taking emotions out, and I was pretty emotional this episode, but take your emotions out of the stock price movements and put your emotions into the fundamentals and news of the company. That to me is why I'm so excited today, because the fundamentals are so strong. And think about it, if you were able to buy a Tesla, let's say they said, hey, you know what, Tesla this week, you could buy it for 50% off. Heck, yeah, you would go and buy a Tesla for 50% off. I can get my Model Y for $30,000. Absolutely, I would go and do that. That's literally what is happening with the stock price right now. The value of that stock is going to be significantly stronger in the future. You're just given an awesome opportunity to buy for less now. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. If you found value in this video, please consider sharing it with others. We do have a membership program. That link is down in the pinned comment below. I am over on Twitter at OracleTim1. I share all the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a Patreon. That link is also in the description. Thank you so much. Have a great one.